Alright guys, Genji Ricer here, and today we have a pretty big video. It's going to be showcasing our 2025 investment plans. We're going to be in YieldMax using margin and our own capital. Hopefully you guys don't click off of this video, because in 1 year from now, if I make a video like I'm making $10,000 a year in passive income, you're going to be wondering how that's possible. It's impossible, but it all stemmed from this video. This is the plan for next year. So either you're with the plan or you ain't. And it's going to involve buying upwards of 4,000 shares into YMAX. So if you're watching this Oracle, I've seen you make fun of YMAX before, and you better not make fun of it or I'm going to take shadow from you. Anyways, I think my journey will be important because other YouTubers are using $5,000 in margin, $10,000 in their own cash. I feel like I'm going to do it way differently. I'm only 22 years old also. I don't have experience with options trading, high yield investing, nor have I ever used margin before. So if you say that you are too scared to do this stuff and that you would never do it, then hopefully you guys watch my video to see my plan and to see me do it, and you would be able to determine if it'll work or not. So currently we got $63,000 in cash that's going to be deployable soon. Assume I use my own capital of $83,000 before using margin. We already got $20,000 in YMAX, which is our 1,100 shares right here. We got $5,000 in feet. So after all of these calculations at the very end, we're not including the $5,000 in feet because feet has never paid a distribution before. So that's a wild card. $63,000 left. The future projection is with 1,100 shares, it'll generate $165 per week or $660 per month. We got two calculations based on 15 cents per share and 20 cents per share. This is conservative and this is the average. What I mean by that is if you add up, so YMAX was paying monthly until 9/18. At this point, they start paying weekly. You add up all the distributions, and there's 13 of them, I believe. Divide by 13, and you should come to the average of 20 cents per share. So that's what this 0.20 means. And 1,100 shares times 0.20 is 220 per week or 880 per month. So you have a low value, which is conservative, and a high value. Me personally, I'm always conservative, so I'm going to be using the 0.15 mainly. All right, so YMAX, the assumption is we will spend $55,000 at the share price approximately of $17.65 a share. And this generates 3,100 shares of YMAX. Distribution rate at 15 cents per share. The conservative number is $469 per week or $1869 per month. At the average, it'll be $623 per week to $24.92 per month. So these are huge numbers, but we got $8,000 left over from the $83,000. So this is going to be like a wild card right here. So you can see we can buy about 100 shares in 2 to 3 different YieldMax ETFs. So what I mean is like something like MSTR, we can buy something riskier with a lot of volatility that pays a higher distribution, which would really increase our yield, right? So all of this here generates at 15 cents per share, $2,520 per month to 30K per year, or $3,360 per month to $40,000 a year if it was 20 cents per share. You add up the $8,000 and higher yielding things like msty, NVIDIA, Tesla, and whatnot, the portfolio would generate about $2,800 per month to $3,600 per month. If any fund goes bankrupt, YieldMax will be the last to go bankrupt because it has everything inside of it. So that's why YMAX is our core. Now this is the fun part, margin. All right, we're going to be using upwards of 1.2 to 1.5 of leverage on our portfolio, so 20% to 50% of our $100,000 portfolio will be margin. We could push it up to 50%, assuming, the market crashes and we just want to buy the dip. We do got cash in our bank account, so, that's collateral for if we get margin called. So I'm not worried about that. And in my day job, the money I'm making at my day job, I'm going to be using it for the taxes and for the collateral in case we get margin called. So I'm not worried about that. Yes, we are factoring in taxes. This isn't complete yet. I'm just, just messing around a little. Here is the fun part, margin. $20,000 in YMAX. It'll take 2.5 years to break even. That'll buy you about 1,100 shares, and it generates $660 per month or $880 per month, between 15 cents per share and 20 cents per share. You guys will say, well, how does it take 2.5 years to break even? That's assuming we used the 1,100 shares to pay for itself, because you got $660 times 12, and I guess $7,900. So 20,000 divided by 7920, 2.52 years. It's all approximate, so about 2.5 years to break even. Now this is a mental shift right here, guys. So this $83,000 initial investment, you have to mentally tell yourself, in any business you have to be willing to put money up and risk it. So you have to tell yourself, you know, if you want to do things slow and have the $83,000 break itself even, get to house money, it'll take too long, and by then you could have scaled your portfolio with margin. And again, it will probably take 2 to 2.5 years to break even. So mentally, I'm telling myself the $83,000 doesn't exist anymore. As long as YieldMax stays, solvent and keeps paying distributions that are up to these projections or close to it, then our main focus is on the margin. How we scale the portfolio is with margin. But $20,000 margin only should take about 7 months to pay off if you're factoring in the initial $83,000. Because right here, we know the portfolio makes $2,800 on the low end. So 2,800 plus it is $660, and that gives you 3,460. Now 3,460 times 7 and $24,000 is over $20,000 in margin. So it's actually over by 4,000. So it's 6 months. So it takes 6 months to break even on the $20,000 in margin. And if we use $20,000 more in margin, it should take less than 6 months. At that point it gets faster and faster. Right here I have the calculation for $20,000 in higher yielders. So if the market dips, like for example Misty went from $35 to $26 the other day, so $26. But if we bought Misty, for example, look, a big distribution, 200%, 100%. What about Nvidia, Tesla? Those are the higher yielder stocks compared to YMax. So if we spend another $20,000 in YMax, it'll generate another $660 per month. But these are going to be generating way more than $660 per month. So even then, we can use the calculation of $700, right? But it would be way more than 700 if you're investing in like Misty. So we got the numbers of 3,460 plus another 700, and that gives you 4,160. Times it by 10, 41,000. So it would take 10 months to break even on $40,000 in margin. But yeah, guys, that's the plan for the portfolio. About $100,000 in my own money and 40 or $20,000 to $50,000 in margin. We're building capital from our day job so we can weather out a margin call or taxes. So I am factoring in taxes. I know a lot of people say, well, you're making this much money, but they never talk about taxes. I am considering the taxes also. The last part of the plan is, if this all works out for 2 to 3 years and I have a big amount of cash flow, you want to diversify. This is the end game. If you're able to diversify, then you're going to be able to preserve wealth. This is from riskiest to safest. Think about a funnel, right? And we're at the top of the funnel right now. We're trying to fill the top of the funnel with YMax, with a higher yielding stock. But the problem is it's very risky. We want to diversify from YieldMax to Brownhill XDTE because it shows a little amount of NAV erosion, if not any. Then we want to go to JP Morgan because obviously it's JP Morgan, so it's a bigger company. They got JEPI and JEPQ. These two have been through 2022. The market went down, but JEPI and JEPQ went back up. So it's shown it can weather out a pretty substantial correction in the market. That's a big fear for a lot of YieldMax funds, that they can't bounce back from the price going down. So that's why I am very worried about a correction. And then after that, you can invest into SCHD if you want to be super safe, and growth stocks. SCHD is a very interesting one. You might wonder, why am I investing into such risky things? And it's because I don't got a lot of money. When you don't got a lot of money, you gotta risk money to make money. Look at you know, pull out the calculator. If you had $1 million and you times it by 3.5%, which is the yield for SCHD, it would give you $35,000. Guys, my portfolio on $100,000 plus maybe $20,000 to $50,000 in, margin, it should generate over $3,600 per month or over $40,000 per year. So this 150K portfolio is going to generate more money than SCHD. A lot of people don't want to wait 20, 30 years to buy VOO and SCHD. They don't want to retire at 50. So everything here works out. With just 10% of the money, we would be able to generate as much money as $1 million portfolio. We can go to Reddit. I mean, look at this guy. This is ironic because he popped in my description. He said he's making on average $1,000 per month. But look at his portfolio, guys. 48,000. 40, 40, 40, 40. So we're at 160, 200. Assume about 250, 300 here and here. He's got over $250,000 portfolio and it's only generating $1,000 per month. You know how many years it would take to build up this much, build up a portfolio like this to even get the money to buy all these stocks? And so this is why we're in YieldMax. The only risk factors I have is if Jay does something bad and if either the market crashes and they're not able to stay solvent or pay the dividend, or if Jay, declares the company bankrupt. But Zega Financial and whatnot has been around for a long time, so I don't think Jay would do that. It all is based on either a market correction or Jay keeping the fund profitable. But yeah, that's pretty much it for this video. If you made it this far, then hopefully you guys comment below on what you think about my portfolio. And again, these numbers are crazy, like $3,600 per month on $100,000 to $150,000 in money. But guys, I'm being very conservative. We bought YMax, which is the safest because if anything happens to any fund, YMax will be the last to go bankrupt. This is our core position. We got money on the sideline as collateral, so any margin call or market crash, we will be able to weather. We're going to be able to pay our taxes, so there's that too. And we're not even using the average of 20 cents per share for our core position. We're using 15 cents per share. That's lower than the average payment from YMax. So I literally don't see how this can go wrong unless, the number one and number two worst case scenarios I told you about happens. But yeah, this is the plan for 2025. The hope is this works out. We don't want to get political, but Donald Trump comes into office soon, and essentially this is the man that is the last guy that would want the market to crash. And if it does crash, like in 2020, for example, they inject a lot of money into the market and the market goes back up. So, and this only happened in a couple months. So, I guess I should tell myself that, even if the market crashes, Donald Trump is probably not going to let the market stay down for a long time. But yeah, that's it for this video. Raishiro out.